We are going to talk about New Relic and Yellow. These might be two companies you have never heard of, but I think they are very important because each of them is doing different things, and I think they are a sign of things to come. We are having technical difficulties with our Monday guest, Taylor, but we are still going to rock and roll and have a discussion. How you doing, buddy?
Doing great. Thanks so much for having me. And like I said before, you're all spared from looking at my ugly mugs for 10 minutes or whatever this takes us.
Oh, just stop it. Just stop it. So I don't know if you've seen the news, Taylor, but we've had some market moving news. New Relic this morning. I think Yellow was on Friday. One is going bankrupt. One is going private. Which do you want to talk about first?
Let's talk about bankruptcy.
So I don't know if you've seen this, but Yellow is a trucking company. It is a company with roughly 30,000 employees. They have issued a notice last Friday to customers, the Teamsters, employees, basically that they're going directly to bankruptcy. This is interesting on a couple of levels. First and foremost, why are they going bankrupt? They had about over $1 billion in debt that they were unable to refinance.
Yep.
It became clear that bankruptcy was an option, and then more and more clients wouldn't use their service, and it was the doom spiral or death spiral or whatever you want to call it. And the other thing about Yellow that people may not realize is I think they got a $700 million loan from the federal government in 2020 to continue operations to not impact the supply chain. So this is a company that was clearly not operating well if you can burn through $700 million. Yeah, we're gonna have just going direct to bankruptcy, not reorganization, nothing else. So I think more and more companies that are bad operators, Taylor, are going bankrupt. And it's supposed to happen. This is supposed to be what happens when the capitalist system is bad operators go out of business.
Yeah, you're 100% correct. And I did see this. I didn't realize the name of the company was Yellow. But yeah, this is one of the largest trucking facilities there is. And from what I read, there was a series of bad acquisitions that happened along the way, which is where they use a lot of their debt. But to your point, as you see interest rates going up, now I don't know the terms and the structure of their debt, but if their debt gets more expensive to facilitate along the way, obviously it becomes tougher for them. They need to increase their profit margins by XYZ just to sustain that debt level and pay it down. And obviously they weren't good operators and weren't able to do that. And I can't imagine them being in a worse time than something like 2020 when COVID hit, and all of a sudden you have this massive supply chain issue that starts to hit. And I don't know what their services were from PPP or whatever it may be, but that might have been really ill-timed kind of shakeup in their supply chain and a lack of need for trucking to take place.
Yeah. Again, the real point of Yellow is this is it's obviously bad news for anybody who had their stock. It's bad news for 30,000 employees, not great news for customers because less trucking means higher prices, right? Kind of supply and demand 101.
Yep. Yep.
But I want to be clear. Bad operators with high debt are supposed to go out of business.
Correct.
Right? If you make bad acquisitions and you take on debt, you're supposed to go out of business.
Correct.
This is what capitalism is supposed to work. These bailouts and all this other nonsense, it doesn't do anybody good. If we have poor capital allocators combined with poor operators, you're supposed to lose your money and you're supposed to go out of business. So, I think there's a lot more of this to come.
You know who you sound like right now? You sound like Mr. Wonderful. You sound
no.
like Kevin O'Leary. You're like, listen, you're not a good business. You should be going, but you're 100% correct. That is how capitalism works in general. Obviously, the weak get sorted out, and the strong get profits and see massive expansion of their businesses. And it's funny, you're starting to see more and more pressure from things like labor unions as well. UPS in the same business, obviously, just got massive labor pressure that happened and almost had one of the biggest strikes play out that we've ever seen in this country. Now, thankfully, we were able to avert it, but nonetheless, you're getting labor pressures. And when it comes to trucking, obviously labor is a big percentage of what their underlying costs are, that and things like fuel. And obviously we've seen fuel prices go up here recently as well. So there were a lot of headwinds that probably faced them. And if you're not a good operator, you don't have margin for error, which is exactly what they've just experienced. And there you go. They're out of business.
There you go. And again, this is what's supposed to happen. I want to be clear. I think there's a lot more Yellow. Yellow is obviously in the name of the company. There will be more bankruptcies, a lot in tech, a lot in my world, a lot of unicorns with billion-dollar valuations that don't have market fit and are losing money every month. There's a lot more pain to come.
Look at private equity. right? There's
Yeah.
been a
Woo.
massive repricing on private equity. And when you think about these young startup companies, they got flooded money in 2021 when, debt was free and companies were looking, or individuals were looking to finance these high growth prospects that have potential for unicorn like returns down the line. But when all of a sudden you have debt start to get more and more expensive, and you get the capital markets locking up a little bit, these private equity companies haven't gotten the bid under them. They've seen quite the opposite, and you've seen massive drawdown in prices, and you've seen write downs on some of them. You haven't seen write downs on all of them yet, but the difference in underlying costs of financing is crushing young up and coming companies that were getting all that private equity capital in 2021.
Yeah. So let's switch gears to New Relic, because again, I think what's happening to New Relic, or will happen to New Relic, is also an option for a lot of companies. New Relic, folks, if you haven't heard, is going private. What does that mean? Essentially, they're getting taken over by a couple of private equities for $6.5 billion, and they will no longer be a public company. They're going private. And again, I think this is something that is going to be happening over the next several years. There will be companies that are bought by private equity and taken private. What do you think?
Yeah, I think you're right there. And I think that when something gets bought, it's generally not a good thing, right?
Mm.
I've been involved in a company that got bought, and it wasn't because we were absolutely killing it. Now, I'm not saying there aren't times when people buy growth engines in new startup
Mhm.
companies and take them because they have this magnificent growth. But a lot of times, if you're looking at a business and going, why did someone buy them? It's because they needed an infusion of capital. And this
Mhm.
company can step in and buy them and either improve their operations, whatever it may be. But a lot of times, purchases and takeovers, although the positive ones get the headlines, the
Yeah.
reality is, and you could see this start to play out in banking more widespread. The reality is it's because there's capital problems and they need to step in and get a lifeline.
Yeah, we're actually going to talk about the Friday's bank failure as well. Let me make sure we close on that one. But back to New Relic. I think it's pretty interesting. The All In podcast, again, a show that I listen to
Yep, I'm
most
familiar. Yeah,
weekends. They actually talked about this probably maybe 6 or 8 weeks ago. They talked about SaaS companies, which obviously a couple of those guys, that's what they play in, David Sachs specifically. But they were talking about private equity coming in and buying SaaS companies software, which I believe New Relic plays in. And essentially, what they would be doing is taking companies with decent install bases, which again, I competed against New Relic back when I had a job. So they're out there, they're pretty well known. And essentially, what private equity may do, we don't know in this case, but they may come in and slash and burn, just basically make it maintenance business, very little add on, and maybe sell it for parts on the other side. So I think this company going private is probably not a great thing for the employees. If I was at New Relic, I would be very nervous. I would expect this private equity to slash 25 or 30%. They're going to want a return on their capital. They're not dropping $6.5 billion because they want to lose money. So they have a plan. And again, based on a conversation from the All In podcast, it might be slash and burn and just get the maintenance spend. What do you think?
yeah, and I'm unfamiliar with New Relic, and you are obviously more so familiar with it. Is this a company that, just to be blatantly clear, this is something that's not necessarily a great takeover, right? This isn't something that was absolutely killing it, and they think can
No,
explode down the line.
no, I mean, I haven't seen New Relic in 5 or 6 years, but essentially they are performance software. Basically, how's my website performing? What's, this, that, the other.
Yep,
Yeah, decent install base, been around a long time. In the software world, probably long in the tooth, probably has got some legacy code that's hard
sure.
to uplift to new technologies. So again, I'm just basing on some 6-year-old information and a 8-week old conversation and All In podcast going. If I was a New Relic employee, I'd be nervous. That's really
Yeah.
where my mind went.
Yeah, I totally agree. This could be a Carl Icahn type situation where he takes it over and
Exactly.
comes in and says, "Okay, where's the dead weight? Let's trim some fat."
Yeah, let's do Twitter. Let's whack 60%, see what happens, and maybe we'll hire 5% back.
Yep, yep.
That's
Cut
kind
to
of
the
thing.
bone.
Cut to the bone. So actually, you brought up banks earlier. Let's talk about, there was another bank failure Friday. I'm not sure if you heard. It's a little small bank in Kansas, 4 branches, 169 million in assets. I expect a lot more bank failures over the next 12 to 18 months. Much like the S&L crisis, it's not a big wave. It's just a constant trickle. What do you think of all that?
It's funny. I actually don't expect it. Not because there
Okay.
isn't not because there isn't pressure and stress based on the interest rate, environment that we've seen. I just think that the government doesn't want bank failures, so they're going to force consolidation. But I'm
Okay.
surprised that
Okay.
they allowed this to play out the way it did. Admittedly, a week before we saw two banks come together, two
Mhm.
West Coast banks come together, and I thought that they would try to have more of that play out and just force the bank that is going to go under to find a partner out there and make them take whatever bid that partner is willing to give them to keep
Right.
liquidity in the system, keep confidence in the system going forward. I was surprised to see this, admittedly.
Yeah, so I think so that's I agree with you actually. If you put that context, there's going to be a lot less banks. Will it officially be a failure, i.e., the FDIC comes in on Friday, shuts it down, opens new on Monday? Don't know. It's probably going to be a lot more Pac West, Bank of California, to your point.
Yep.
Like, I have a gun to your head. Once you got a gun to your head, you're gonna do what you got to do. But
Right.
apparently in this case, and because it was really weird, right? I mean, they had a bank lined up to buy them, so there must have been a couple of toxic assets that just made the deal not go through. That the FDIC, and again, by scale, it was a tiny bank, 169 million. I think Silicon Valley Bank was 209 billion,
Billion.
so
Right. Correct.
not even 1%. Um, the same size, but again, a bank failure is a bank failure. Another one happened.
It is, and it is the most meaningful thing on the planet that happens to those people that have their money at their bank in
Yeah,
Kansas that very day. So again, the pressure, the anxiety that people feel is something that the government, I would think, would try to warrant away, but they weren't able to do so in this situation. I think that in general, that is going to be their number one task, and maybe this one was, it's sad to say, but maybe this one was too small to be of big concern.
yeah, maybe that was it. Well, at the end of the day, I think there are signs that we're going to have more bankruptcies, aka yellow. I believe we will have more acquisitions or going private, like New Relic, and we are going to have less banks, whether it's PacWest and Bank of California or a true bank failure, the bank in Kansas, which the name escapes me at the moment.
Yeah, and I'll just kind of wrap my comment with this. Like, again, I think the number of banks in the United States right now is something like 4,600 banks,
Mm-hmm.
and in every other major country, probably even every other country in the world, the number is a small fraction of that, in the
Yeah,
hundreds.
it's pretty small. And again, I think we're going to have less banks, a
Yep.
year, 2 years from now. Taylor, you do a
Agreed.
lot of great stuff. Where can people find you?
Yeah, find us on Instagram and on TikTok at Life Goal Investments.
Awesome, buddy.